What's going on, everyone? Gilman with Wellthy Stocks back with another video today, and it's a little bit of a different video. I'm actually going to be taking a look at what stocks I would buy with the $1,400 stimulus that millions of Americans will be getting. Now, you might have already gotten it over the weekend, you might be getting it this upcoming week, and if you're looking to put either the whole $1,400 or part of that into the stock market, and you need ideas on what stocks to do so, feel free to take some of these. Now, I will say I'm going to be covering 6 different stocks, but these are all relatively, high growth companies. Some of them are a lot newer companies, right? So just want to highlight real quick that these are inherently riskier companies. If you want your money to kind of be safe and slow growing, companies like Apple, Microsoft, Disney, all those, well, Disney I think is going to be growing really a lot as well. But, some of those well-established companies that are going to give you slower growth, but consistent growth and a little bit of dividends along the way. These companies, they can maybe double in the next year, 2 years, 3 years, but they could also just as easily, not do well if their growth stops or they take, a beating for whatever reason, or they get a lawsuit. So just want to quickly highlight that this is kind of a high risk, high reward type of, some of these stocks that I'm looking at. So I've got 6. We'll kind of run through what I like about the stocks. I'll also try to highlight some risks around certain companies. That way, you're more aware. And then at the end, if you like one of them or all 6 of them or somewhere in the middle, feel free to, invest some or all of your money. Want to just say again, to make sure to always do your own research before you invest, to make sure you agree and not just, invest because someone else told you that they like the company. So that being said, let me hit record in my on my computer here and we'll get right into it. So 6 stocks, we'll go kind of one by one. I'll break it down. I'll talk about the stock price. And let's start off right here with Palantir. Real quick, if you enjoy, what you see here, I'm using Webull for my charting here. If you want, link in the description below, sign up, get some free shares if you use my referral link. So Palantir is a stock, ticker symbol PLTR, that I cover on a pretty regular basis. If you're not new to my channel and you've seen my videos on a daily basis, I talk about the price action that happens with Palantir. So Palantir is a data analytics company. They do AI work. They can take unstructured data and do data analytics on it. They've got tons of clients, big names, and they've been growing really well. So they IPO'd back here in September 2020, and they were pushing up. If you've seen my stock videos, right, we were looking at this breakout pattern, went to 45, sold off, ran into earnings, and then they actually had a surprise loss. They also had lockup expiration, and then the whole market was getting beat down. So they actually pulled back all the way to kind of the low 20s, bouncing around the 22 level, right? So currently the stock sits at about 26.92, 27.05 as of after hours on Friday, March 12th. So what do I, like about this company? Let's take a look at that real quick. I've covered this in my other Palantir videos. The other stocks I'm going to be talking about are newer. So, if you've heard me say this, I apologize, but I know a lot of new viewers are probably watching this. I want to cover this. What I really like about Palantir is the growth that they've seen. They're relatively well established. They're well, heard of. People have heard of them. People have heard of what they do. There's a lot of excitement around the company, which is, super, super important as, we move forward and we see their growth. So they had a 47% growth in 2020, and they're expecting a Q1 2021 growth of 45%. That's absolutely amazing growth on top of kind of what they're already doing. They had over $1 billion in revenue in 2020, again, 47% year over year. A lot of that did come with, some of the work that we're doing with the government around coronavirus. But I definitely think that, a lot of those departments are now going to be using them for other things. So I don't think that it's a one and done with the coronavirus relief and stimulus stuff that they provided. I think it's a great opportunity for them to kind of introduce their software to them, and it'll lead to different things. The other thing I want to talk about, right? Take a look at these companies, right? BP, US Army, Rio Tinto, PG&E, Air Force, FDA, NHS. And then, so this is Q4 2020. In Q1 already, we've heard with deals like IBM. We've heard that their platform is going on Amazon's AWS platform, right? We've heard about the deal with 3M, which makes, the face masks that you've probably seen around, packaging material, and a bunch of other things, right? So great kind of move for Palantir. Another thing I want to point out is their revenue for the same customer is up 41% year over year. So that means the same customer that they had in 2019 and 2020, on average, they got 41% more revenue, which is, again, a strong indication of not only growing with new customers, but also growing within the same customers as they're happy and buying more products. And again, you know, their top 20 customers are $33 million. So that's absolutely great. The number of customers that have more than $1 million in revenue grew 32%. The number of customers that had 10 million or more grew 50%. And I could keep going on and on, but I know I'm probably getting a little bit boring. So the key thing here is great data analytics platform, a lot of excitement about the company, a lot of growth opportunities that are coming in 2021. And so let's take a look at the stock price. Stock price currently at $27. I personally have been invested in Palantir for a while, and with this recent downturn, I was able to load up a little bit more. What I'm hoping for you guys in my channel, for those of you guys that know, I don't just say random stuff to say it. I'm not saying Palantir to 100. My first price target on Palantir is just getting back to where we were here, right? In the high $30 range. That implies about a 50% upside. So if I take a look here, you know, currently where it sits at the 26.95, I'm gonna just say, and it gets back to, you know, let's say it gets back to the $39 mark, right? If you take a look at this little black box, right, in the second last, 45.07%, almost a 50% return on your money if Palantir can go there. Now, I'm not saying Palantir goes straight up and by, you know, 330 2021 it'll be back there. I'm more talking, you know, we keep drawing this line and over time, right? So it'll go up, it'll come down, it'll go up, it'll come down, it'll go up, it'll come down. What I'm saying though is if any time in 2021 it hits that high 30s, which by the way I think it can hit a lot sooner than even the you know 9 months left in 2021, then I'm talking about getting a 50% return. So with Palantir, I like the company. I've got some leaps going out to 2022 and 2023, which are pretty much longer dated options contracts, your calls. And then I've also loaded up on shares. You know, love the company, see great growth. I personally liked it at 25. I don't think 26, you know, 27s is a terrible price. It has been, you know, going up and down a little bit. So again, in all the cases, I'm going to be saying the same thing. If you like the company, right, make sure to build a starter position and then add to your position. Don't just go all into any company. Always make sure to dollar cost average in, and that'll be, you know, that'll make sure that, you know, long term you are looking pretty good. So again, expecting it to go in the high 30s. Personally, if you ask me, I think 2 to 3 years from now, Palantir is a $100 stock. That's my belief. I'm not sure if it gets there this year. It could. I'm not sure if it gets to 50 this year. It 100% could. I'm going to be super conservative and say even if it gets to the high 30s, that's a 50% return on your money. Now, the next stock I want to cover real quick, and this is another one that you know, I cover on a pretty regular basis, is Nio, and then the other 4 I promise are new companies that I've not really covered. So again, same thing with Nio, covered on a pretty regular basis. This is what this line is about. I've covered it again in pretty great detail on my channel, so I'm not gonna, you know, go into super crazy detail about the company, but they recently had their demo day, and that's where they sort of talked about their technologies and their platform. So they released a new sedan. They're talking about, you know, having record deliveries in Q4 2020, a number that we're expecting to continue, month-over-month growth, year-over-year growth. They've got a super cool platform, which I think is. Actually, let's take a look if we can get Nio quarterly earnings on their website, and if we can, you know, maybe we could just cover it there, and then, you know, that'll be great news for us. So, or actually, let's go to events. I want to talk about Nio Day that they had, and kind of cover some of the stuff that they covered there. There we go. So. Yep, this is what I wanted to talk about. Perfect. Okay, so on Nio Day, which was early in January 2021, they got their first flagship sedan. So they had 3 kind of SUV crossover vehicles. They got that. They got their first 150 kilowatt hour battery pack. as you know, that's crucial, right? That's crucial for battery power. You can hold more charge, you can go farther. Power Swap 2.0, which I think is great technology. I know a lot of people don't necessarily agree. I think, you know, if they can prove this concept, it could be great. So you go in, instead of charging your battery, you take out a battery, you put in a new battery, and you're good to go in like 5 minutes. I think that's one of the biggest hindrances for electric cars currently, is that you take too long to, you know, charge your car, and therefore people aren't necessarily looking to switch, and then their autonomous driving technology, right? So with all that being said, right, they've had record growth. This is the car that we're talking about. And what we've seen is a lot of people are preferring kind of Chinese made cars in China, China being a great growth market for EVs. You know, kind of put 2 and 2 together, I think Nio has a great future. So again, similar situation here. I've been a long-term investor in Nio. I added some shares in the high 30s, low 40s level. And I think that, you know, this company has great potential. The one thing though is this 89 EMA is coming in at 46.35. I think it's really important for the stock to get over the 46 level, 46.30s. Again, not too far from it. But once it gets above the kind of the mid 46s, 47s, establishes that as a good level of support, then it's 50 next, 55, 60. And I think it'll do super well. These lines, these little lines, I look at on a daily basis because those are levels of support and resistance if you watch my videos. But what am I looking for this stock? Again, I'm going to get rid of these EMAs. I'm going to get rid of my drawings for just a sec. Look, I'm going to make another kind of conservative kind of approach and say, hey, if it goes from, oh, I guess I can't hide all drawings if I'm trying to draw. And what I'm saying is, look, if it goes from kind of this high 45s to even the $60 mark, right? I'm not saying the $66.99 I had here. I'm saying $60, which I definitely think it can get to sometime this year. We're talking a 31% growth. Anything beyond that, cherry on top. I'm a long-term investor in Nio, looking to hold this long term. So again, the little black box here in the second to last line, 31.4%. If it gets to 59.83, which I definitely think it can do, if not sometime in the next 9 months of 2021, or if not a lot earlier than in, you know, sometime in 2021. So again, 31% growth there, high 40% growth in Palantir that I'm hoping for this year. I think, you know, as EV grows and as the overall market grows, as they can make more vehicles, sell more vehicles, you know, this number is only going to go. If it goes back to all-time high in the 66.99s, we're talking, you know, similar Palantir, 47% growth. I'm going to go with kind of the price target of just, you know, $60, 32% growth, still amazing growth on your money. As always, these stocks could pull back violently, as we saw, you know, this push from 64, you know, it halved in like a couple weeks. So again, if you're building a position, make sure to build it slowly and kind of watch what you're doing, add on pullbacks, right? But don't just, you know, bet your house on it or anything, because that could, you know, cause some trouble. So again, run to 60, 32% growth potential there. Now that's done. What is the next company we're talking about? We're talking about Skills. We're talking about ticker symbol SKLZ, and this is a company that, you know, I really like. Let's talk about, you know, kind of what they do. This is a Motley Fool article. I like looking at Motley Fool articles, not necessarily as the reason I buy stocks, but hey, what are they seeing? What am I seeing? What am I missing? What are they maybe not looking at, or looking at in a different way? Let's take a look. So what are they? They're a mobile gaming platform. They just went public via a special purpose acquisition corp, so a SPAC, as they're becoming more and more popular, right? So let's take a look at, you know, kind of some of their metrics, and then we'll do the same kind of stock price analysis, right? So mobile gaming is a $68 billion market, growing 20% annually, so that's great. The market they're in is a growing market and fast growing. 2.7 billion gamers in the market. Skills currently only has 2.4 million monthly active users, so great potential, right? Great growth potential for the company. 92% year-over-year revenue growth. So again, all these companies that I've mentioned to you guys, right, we're talking 40, 50, 90% growth, which you're not going to get with super established companies, right? They've kind of already reached that. Now they're trying to maintain and grow, you know, 10, 15, 20%. These companies are looking to grow, you know, 50%, 80%, 100%. So that's what we're looking at here. they've got some, really important stats. A lot of people spend an hour on the platform, which is more than TikTok, Snap, and Facebook. And then we take a look at net loss for the year of 122 million because they're focusing aggressively on growth. That doesn't worry me as much because, you take a look at all these successful companies that we see right now. Even Tesla until very, very recently was losing money every quarter. Amazon lost money for a super long time. Again, not comparing this to Amazon or Tesla, but just giving you examples that, to kind of build that business to grow the way you want to, sometimes you have to take a loss. So there are concerns with the company. They're talking about it trading at 46 times trailing revenue, and they're expecting revenues for a year. They're talking about, hey, user numbers are declining. They had 2.7 million in the fourth quarter. They went down to 2.4, so they lost about 300,000. But paying users more than doubled year over year, which drove revenue growth anyway. So do you care about overall users, or do you care about revenue growth? I care a little bit more about revenue growth, but to each their own. And then they're talking about delivering a little bit more than the expectations on the full year revenue, and they so currently they're spending a lot on sales and marketing, which is exceeding revenue. But that being said, Motley Fool says maybe they're not the buy that everyone is kind of going in with, but even with the high ceiling and management showing great revenue, it's worth a starter position today, which Motley Fool saying that is a big deal. They're usually like, hey, we don't like the stock because X, Y, and Z. So they're saying starter position, if it falls more, which let's see when this was written. This was written March 13th. So they're saying, hey, if it falls a little bit more, then, it might be worth a buy. I personally, had invested a little bit kind of back at this level in early January around the $20 mark. And then when it fell here to the 25s, that's when I sort of added a little bit more. It's already, pushed up a little bit from that, but I still think that, this is a great company. Now, the one thing I will say though, if you are investing in this company, if we take a look at the 5-day chart, there are so many opportunities to enter at a great price. So you take this sell-off was kind of a one-off thing in the overall market. But even on a day like Friday, the range was 29 to kind of 26. So if you do like this company, it's not a bad idea to kind of put in the limit price you're willing to buy at, and then monitor it. If it starts to run away from you, then you can reconsider, but don't just go tomorrow morning, market order, and buy the full, kind of amount. Start with a couple shares. What I like to do is start with a couple shares, just so I remember kind of what stocks I want to invest in. And it's, I have 2 shares of something in my portfolio, and then I'll look at it and go, oh, it's because I wanted to add a little bit more, right? So set reminders, set alerts, set that limit price, and let it go. With this stock, again, I'm not even gonna say 46, right? I was invested in 30. My first, again, price target for this company is the $40 mark. So if we, sorry, I'm gonna redo that line, kind of where we are in the 29.30s. If it goes to 40, again, 37% growth. If it goes to all-time highs, we are talking 58% growth. Now this all-time high was, only there for a couple of days. So I'm not necessarily saying it's going to get back up there. I definitely think it can in the long term, but if it gets to a little bit more manageable kind of $40 mark, 36% return, nothing to kind of just laugh at, right? Great return there. The other thing, I don't know if Webull is going to show it, but Kathy Woods from ARK Invest, as I'm sure you guys know, they added shares of DraftKings and Skills, right? DraftKings is another, kind of online betting site, sports related, so that's great. She's got kind of belief in it, so if you know who she is, if you believe in her and you like what she has to say, gives you a little bit more of an inclination to invest in the company. So that's Skills, ticker symbol SKLZ. Now the next one I want to cover is Lion Electric. I've I think made a video on this before, but they have ticker symbol NGA. They will probably be merging sometime soon. Look at how beat up this company is. So what is this company? They're Lion Electric. They make all electric, medium and heavy duty urban vehicles. So school buses are one of them. And they recently announced an order end of February for electric buses for the LA Unified School District, which is the largest school district, I believe, right? Or one of the largest and well-known school districts. So they have an order of 10 buses right now. But, you know, if this goes well, they could get, you know, tons more, as LA is probably going to be one of the first countries to, you know, kind of start to go the electric route. So that's great news for us, or well, if you're invested in the company. I like the company. They are, you know, as we get again more into EVs, more into electric vehicles, I think that, you know, this can be, you know, really great for the company moving forward. So again, not going to spend too much time on this. They're an EV company making school buses, making big electric vehicles. But focusing on the stock price, again, they're in the $17 mark. They got down as low as kind of the $15 mark, which is, you know, definitely pretty close to kind of the inherent value of the SPAC, right? Which is about in the high nines, $10 range. So getting pretty close to that. And I think this is a company that, you know, I'm personally excited about, hopeful for, but also, you know, watching to see as they get more orders, because I think that's going to be crucial for their growth in the future. So currently sitting at 1769. I've started to build out my position. I'm not where I want to be full position for Palantir and Nio, pretty close to my full position. For Skills, building my position. For NGA here, building my position. My goal for this, again, if it gets to the $30 mark, notice how I'm not even talking about it going to 50. I'm not talking about it going to 100. I'm talking about saying it's been at 30, it's been at 35. If it gets back to the lower amount, you have 70% growth. And I definitely think, again, it'll get there over time. It's a matter of when. Don't necessarily think it'll be as fast of a climb up. But again, if it can do that sometime in 2021, you know, running back to 30, it's about a 70% return on your money. Great company, great potential as we kind of go more the EV route. You know, these big companies are also going to have to make these changes. And so therefore, you know, that's kind of my thesis on NGA. Again, 70% return if it makes it to $30 based on where it sits today, right? So, and again, remember, I'm not saying it's going to go straight up. That would be silly of me to say. I'm saying if I stretch this line out and I go all the way back to end of 2021, okay? This is a pretty doable line, guys. It could go boom up to 25, fall, boom, right? Anything can happen. What I'm saying is sometime in 2021, I think we get to 30. That's all I'm saying. Okay, so with that being said, what is next? All right, so we got two more. We got the next one we're looking at is TIGR, which is UP FinTech Holding. And let's take a look at how this company is, what they do. So real quick, what do? They are they're TIGR brokers. They're based out of Hong Kong. They're an online brokerage firm specializing in offering offshore equities to the rapidly expanding domestic Chinese retail investor base. So this is great because during the coronavirus pandemic, as I'm sure a lot of you guys, you know, might be new investors as well, online brokerages have done super well. A lot of people opening new accounts, a lot of people wanting to get invested in the stock market, which is great. Retail investors have entered the market like no other time. So with that, you know, they have great potential because of strong growth, strong user base, in-house clearing synergies, as well as diversification away from low-cost trading strategies to other banking niches. So again, global Chinese investors is what they focus on. They're known as TIGR brokers. They've been a brokerage firm since 2018. This is kind of their structure and how they work. They are confident about a couple things, right? So, you know, the growth, how they're working, you know, what they see. They're diversifying their revenue. Initially, it was mostly commissions. Now they're, you know, talking about interesting and financing service fees and other revenues. So that's great as well. They've got some really great synergies with, you know, kind of everything that they do with, you know, what I mentioned with the clearinghouse and stuff, and that's why I like it. I mean, if you take a look here, 2020, about a year ago to where we are now, they've seen, you know, crazy growth, and what we're seeing is crazy growth both or in the stock price, right? A lot of excitement around the stock price as a percentage. And then we're also talking about, growing, how they're, growing from here on out, right? So that's what we're looking at here, you guys. Great companies. What we're talking about here is a fintech company. So I think a couple industries are going to do super well in 2021. EVs, obviously, renewable energy, and fintech. Those are kind of my three favorite ones. This is, there was another thing that I wanted to focus on here. Maybe I missed it. There's obviously a lot of risks with this. I know a lot of people say they don't like investing in Chinese companies. Totally fair. If it's not, something that you like, no one's telling you to, necessarily, invest. But what I like about this company, right, is the overall market potential in China is huge. And the early stage is great, right? The growth is great. 80% of China's A-shares trading market is dominated by retail traders, with Deloitte forecasting a retail investing total addressable market of 30.2 trillion. And I think that, the position that TIGR, UP Fintech, Tiger Brokers is in currently gives them a nice competitive advantage to be able to continue this growth over the course of the long term. So I think, if you want to read through this article, feel free to, but I'm not going to go into more details, or I'm not going to bore you guys with kind of some of the details. If you do want that, let me know down in the comment section. I can make a video separately on TIGR, but I wanted to quickly cover that here. So this stock, similar to kind of all the other ones, has recently sold off with the market sell-off, market correction, pretty much all the way down to the 16s. I added some around the 20s. I've been invested at the kind of here, again, early January, or no, excuse me, late January, because I'm invested around the $15 mark. And I added some, down here at the $18, $19 mark. And they've pushed up a little since, but they have had a little bit of a pullback. So again, make sure to always slowly add on pullbacks. Don't just market order all your money and that's it, right? Because if it pulls back, you have no money left to kind of buy more. Similar thing here. Again, if it goes up from, kind of where it sits right now, and let's say it goes back to $35 sometime this year, 45% return. Again, if you don't like Chinese companies, this might not be for you, but I definitely see great potential. And as always, I'm not saying it's going to go straight up. I'm saying over the long term, from today, March 12th to the end of the year, it'll, I think, be back at kind of the $35 level, 45% return there. The last one I wanted to cover is IPOE. So you guys have heard of Chamath. He's been, heavily talking about social capital. He's the one taking it public. What is this? It's Sophie. I don't know how to say it. I'm just gonna say Sophie, maybe, and hopefully that's right. If one of you guys wants to correct me down in the comment section, that's okay too. But taking a look here, right, ran up on the announcement, pulled back, ran up all the way to 28, been gradually selling off, went as low as 13s, and then now back at the 19 level. So what do? They're an online personal finance company. I'm sure maybe a lot of you guys have heard of them too. They do student loan refinancing, personal loans, mortgages, credit card savings, and investments. They've got 1.72 active users and on track to reach 3 million users by the end of 2021. In 2020, 620 million expected in sales. This is the kind of key for me is grow by 58% in 2021 and 53% in 2022. So again, a company that can grow that much. Higher risk, but also if they can pull it off, higher reward as well, right? So feel free to look more up about Sophie. I'm not going to go into crazy detail again, but as a SPAC led by Chamath, right? And he's been kind of popping in the news like Kathy Woods has too. So if you like him, you like Sophie, this would be a great buy. I like this company. I'm in a leap call, I believe, and then also I think some shares, but definitely looking to maybe add some shares. So here again, similar story. You guys are probably getting tired of me doing this. 25, more conservative goal. I think it gets there sometime this year. If it does, we're talking 34% growth. A lot of the companies I've covered, I think it's in the mid 30s to kind of high 40s, even 50% growth. And that's me talking about them not even getting to all-time high. That's me talking about, I think realistically they can. So let me take a minute here and go back at kind of, all the companies and what I see with them. And then, it's up to you guys on what you want to buy, or excuse me, what I own in them, right? Palantir, I've got leaps going out to 2023, 2022 shares, hoping it goes back to high 30s. I think it could be $100 stock in 2 to 3 years. Nio, I've got shares and a leap call going out to 2023 as well. Again, looking for a pushback to 60. Skills, I've got shares only. I'm adding shares. I think this company has the potential to go back to 40. Northern Genesis, again, Lion Electric. I left my line here. I think it goes back to 30. I've got shares in this company. TIGR, I've got both shares and a leap call going out to 2022. Hoping for, again, a pushback to the 35 level. And then IPOE, I've got a leap call going out. And then some shares, but I'm looking to build my position out there as well. One thing I'll notice is, do your own research. My goal here was to share with you what I'm seeing. Obviously, if you're seeing something different, let me know down in the comment section. If you don't agree with me, totally cool, right? Your money, your decision. How I would do it, if you like all these companies, take whatever stimulus money you're getting, take whatever other investments you have, divided by 6, you can equally spread it out. What I would say though is slowly build the positions, right? Don't just go market order Monday morning, you're done, you're just chilling. Buy a little bit, add on pullbacks, sell on, pumps, make some money. If you like the companies long term, feel free to just, set it, forget it. Look back in a couple of years and hopefully in a couple of years, right? Keep monitoring it. But if you think they're going to grow, which I think all these companies have the potential to, definitely a good idea. In my opinion, again, this is what I see. These are companies that I like. I'm invested in all of them. You don't have to invest in any or all of them. This is not financial advice. I'm just showing you what I see. Hopefully you guys see value in it. If you do, let me know down in the comment section, right? I could try to do more videos like this one. And another thing I want to mention is, make sure you stay up to date with all these companies, right? If there's a lawsuit, if there's anything crazy going on, if there's industry regulations, right, that could definitely take a hit on the stock as well. So make sure to do that. And again, make sure that, you're doing your own research and you feel comfortable in these companies before you invest. One thing I will say is I'm not even talking about the growth after all-time highs. In many cases, I'm not even doing the growth projection based on all-time highs. I'm doing the growth projection based on all-time highs minus like $5-10. Realistic things that I think are definitely going to happen. I'm not saying Palantir to 100 and saying buy it now. I'm saying Palantir to 47% growth. That's why you should buy it. Just something to keep in mind. I like keeping realistic expectations. I don't like lying to you guys. I like sharing what I actually see with the company. So hope you guys enjoyed. If you did, don't forget to drop a like, subscribe to my channel, comment down below what your thoughts on these companies are, if you're invested in any of them, and I'd love to chat with you guys down there. Let's remember to be a bit better every single day, and until next time.